Hey everyone, if you're heading into retirement and you're feeling unsure about your tax strategy, well, you're certainly not alone. In fact, it's one of the biggest blind spots that I see in retirement planning. You've saved, you've invested that money, and maybe you've even gotten a retirement income plan, but taxes are often the mysterious missing piece and the piece that can quietly drain thousands from your nest egg if you're not paying attention. So today, I want to show you a free tool that can help give you clarity. You can use it to test real life questions like, what happens if I do a Roth conversion? How will filing for Social Security affect my taxes? And the dreaded Social Security tax torpedo. Am I going to breach one of the IRMA brackets? And what if I bunch my charitable giving into 1 year instead of spreading it out over multiple years? Now, there's lots of other questions that can be answered for sure, when you're using a solid tax calculator that lets you freely play around with the inputs. And I think this kind of exercise is really important because these are the kind of moves that can save you thousands over the course of your retirement. So if you're looking for a way to get more control of your taxes, I want you to check this out. Now, I'm going to put a link down in the description where you can use this, but stick with me for a minute, and I want to do a quick walkthrough to show you just how powerful this can really be. All right, so when you go to the link in the description, it should pull you directly to this page. If it doesn't, you can always go to taxact.com/tools/tax calculator, and you should see this. Now, there's a few use cases for this, but let me cover something else first. Number one, I don't know the people at TaxAct. I believe it's owned by a private equity firm now. So this isn't some sort of affiliate relationship where they're sending me some sort of compensation for sending traffic to their site or anything like that. They do ask you to create an account or sign in, but you don't have to. You can just use this calculator on their site as it stands. And a couple of use cases for this would be, number one, let's say that you've gathered up all your stuff and you're getting ready to do your taxes. That's when you would look at prior year taxes. So in this case, it would be 2024. For example, if your stuff is at your CPA's office and you're just anxiously awaiting what will be the results, well, you could look at this and get an idea. But for purpose of today's video, I want to talk about doing a bit more strategic planning. And so you're going to use the current tax year for that. And so let's just assume that your date of birth is January 2nd, 1960. Did you use TaxAct to complete last year's taxes? Let's say that's a no. Are you single or married? Let's do this for a married couple who is married filing jointly. And what year was your spouse born? Let's just say it just happened to be the exact same year, 1960. Can you be claimed as a dependent? No. Do you have any dependents? For most retirees, that's going to be no as well. Then we'll hit next. And this is where we start to put in the income. Now, we could chase lots of rabbit trails here and go look at a lot of scenarios that are only pertinent to a few people. So I want to keep this very broad, but mostly just to give you some exposure to this tool so you can start to use this to look at how modeling out different income streams are going to impact your taxes. So let's just assume in this case, you didn't have any taxable wages. You're retired, right? Who wants to work? No net income, business or loss. You don't own any businesses. Did you do any withholding? And you can leave that blank as well. Even if you're getting Social Security benefits and you have withholding, if you just want to look at the big headline number and then deduct that in your mind for, well, I withheld X dollars from my Social Security, you can do that. That's not a problem. Do the same for your spouse. That's where it goes. And this is where it gets into where we actually want to start putting in some numbers. So the interest income, let's say that you had $100,000 in a money market fund earning in the 4% range. So let's just say that was $5,000 in interest income that you expect. You didn't have any unemployment income, and you'll have to hit this down arrow to get to the good stuff, right? The stuff that really matters. So dividend income and qualified dividends, the difference between those is that dividend income, also referred to as non-qualified dividends, is taxable as ordinary income, whereas qualified dividends are taxed as the dividend and capital gains rate. And the quick difference is that a qualified dividend has to meet a certain holding period, and it usually has to be from a U.S. company or a qualifying foreign company. But if you want to know if you still have about the same holdings as you did last year, you can look at your 1099 DIV. And on that, I believe in box 1A, it'll show your ordinary dividends and the qualified dividends in box 1B of that. So you can figure out real quickly which kind of dividends you have. And then you've got the short-term capital gains and losses, long-term capital gains and losses. You know, in this scenario, let's just say that you did have $10,000 in capital gains, but you can also plug this in as a loss just by putting the negative mark in front of it. So if you realize some capital losses, you can certainly do that. In this case, we're going to say that it was a capital gain. Any state tax refund, how much did you take out from your IRA? Let's just say that it was $40,000. That's a good round number. And let's say that collectively between both you and your spouse, you collected $45,000 in Social Security benefits. Then you go to next, and now it's going to ask you about some deductions. Did you have any IRA contributions? Most retirees, that's no. Student loan interest paid, zero. Medical expenses, state and local taxes, that is one that applies to most people. So let's just say that that was $6,000. What kind of mortgage interest? Well, if your house is paid off, you're not paying interest. If you're still making a payment, that's still there. Just know that back up to the state and local tax, there is a limit on that. And I'm pretty sure that the limit is baked into this software as well. Charitable contributions, let's just say that, you've given $12,000 a year to charity, maybe $1,000 a month is the way we see that in a lot of cases. And then you're going to answer some questions about credits. Did you pay any child care expenses? No. Let's just select no on all of these. And then you're going to get your total income here. The deductions, that's your standard deduction, and that gives you a taxable income of $59,475, and then it shows you what your tax burden is, $5,460. So you can go in and start playing around with some of those numbers to start figuring out, okay, what happens if, and then you can fill in the blanks from there. For example, what happens if I take out another $100,000 from my IRA and convert that to a Roth? How would that impact me? What happens if I don't take any distributions from my IRA? What happens if I only take half, right? There's a number of trails you could go down here, but one of the things that you're going to want to look at is how all of this works relative to all of the different brackets that are out there. And unfortunately, they don't do a good job of showing you all of those brackets, right? They have to hide that behind some of the paid features, I'm sure. And so a simple way to get that is just to download my retirement planning cheat sheet. And I'll show you that real quick. So this is the retirement planning cheat sheet. So in this cheat sheet, you can see the 2025 federal income tax brackets here. So you know that, okay, if we're married filing jointly, you know, our total income came up just to the top of this 12th. Well, we can afford to take out a little bit more to top that off. Or it may be the 22% bracket that you're going, you know, what happens if we convert up to the top of the 22 and get our total income up to the top of this, or your taxable income rather. That's what this is based on. So there's a number of things that you can use this for with the capital gains that are here, which is going to be based on your taxable income, your Medicare premiums, which is going to be based on your modified adjusted gross income in the way that it's calculated for Medicare. But I can tell you that for most retirees, your adjusted gross income is generally your total income. And then your modified adjusted gross income for purposes of Medicare is simply going to be your adjusted gross income plus tax-exempt interest. So if you don't have any tax-free bonds, you can just go back to that total income number and use that to help you get good estimates of this. One thing I'll point out is that if you do want to go back and change the income, I would use the back button at the bottom instead of the back arrow here. Different browsers will treat that differently, and it would be frustrating to have everything plugged in and you find yourself with everything zeroed out. So for example, if you say, okay, look, let's plug in another $50,000 in IRA distributions because maybe you're going to convert 50 of that. Well, now you can go through and you can see, well, that changed my total income to the 143. And to get to the actual taxable income, you'll have to keep going through. And you can see that your taxable income would be 113,250 there. So a really useful tool, and I hope that you find it valuable. Now, this tool isn't perfect, and you've seen some of that in this demonstration here, but it is a free tool. And at my firm, we use one tool for the long-term tax projections, and then when we're dialing in the individual years, we use another tool to get really focused. But I'm fairly certain that for both of them, we pay, I don't know, somewhere between $6,000 and $8,000 a year. And you probably don't want to have that kind of expense, especially in retirement. So for big picture tax planning, I think that this tool is fantastic. And I hope you find lots of value in playing around with it. Now, needless to say, I wouldn't make any big decisions about taxes based solely on this tool. Instead, I'd recommend that you talk to your tax advisor, but this tool will certainly give you some great talking points for that discussion. All right, thanks for watching.